I think the difficulty for us to really have any sort of guidance around margins for the future, particularly for ANZ, is that we have more moving parts in our business because we really are an international business. We operate in 29 markets around the world, unlike many of our peers, which are almost exclusively operating here. So a lot more moving parts, and of course it will depend on the various rate actions, whether it's in the Fed, whether it's around our Asian markets or of course in New Zealand. So a little bit hard to say what will happen to margins overall, but competition will always keep a lid on margins, and what we are seeing is a shift from competition initially starting in the sort of home loans and lending side, and now very, very much so on the deposit side of the balance sheet.
So if you're looking for ways to grow the business then, Shayne, how confident are you that the Australian Competition Tribunal will give the green light for your purchase of Suncorp Bank in February next year? And if it does not, how else will you be able to claw back market share that you've lost over the past number of years in your retail and commercial banking operations?
Yeah, well, actually, over last year, we grew share, which is great to see, because we sort of really invested heavily in terms of our processing capability and making sure that we can get answers to customers as quickly as possible. And so actually, of the majors, we were one of the few banks who actually have grown market share in terms of home lending over the last year. The way that we want to grow share is by being better for our customers. And, our big investment is in our new retail business, ANZ Plus, which is a digital-first financial wellbeing proposition, and we're really excited about that. 500,000 Australians have already voted with their feet and joined ANZ Plus, bringing $10 billion of deposits with them. And last week, we quietly launched the ANZ Plus home loan, which will be really exciting and seed long-term growth for us. So that's our core plan. Get the basics right, deliver better services, faster decisions, great prices, and convenience to our customers. Look, we would love to do the Suncorp Bank deal. We think it's the best thing for the 1.2 million customers at Suncorp Bank. We passionately believe we've got better technology, better services, better product propositions, and the ability, really importantly, to invest over the long term to continue to improve those propositions. And we'd love to be able to bring that opportunity to the 1.2 million Suncorp customers. We also are really excited about the opportunities in Queensland. Queensland is the fastest growing state in Australia. It's got the youngest demographic. There's lots going on in the state. It's the most quickly diversifying state in terms of its underlying economy and drivers, and we want to be a bigger part of it. And we see the acquisition opportunity as a platform for growth for us that we can invest behind. We are very confident because we believe in our case. We believe that this will make us a more competitive player, not just in Queensland, but right across the country.
Shayne, this is Tamor in Singapore. Yes, you believe in your case, but it got knocked back at the first hurdle. We've still got until February before a final decision comes through. How much of a distraction is it for you in the meantime? What is your plan B if you don't get that approval? And to Mandy's point, do you think you're going to get it or not? I mean, how strongly do you rate your chances after the initial decision?
Well, it's certainly not a distraction. I'm not an easily distracted person. Listen, I think we need to put it into context. We would love to do this transaction for our Australian retail and commercial bank. It's a really exciting opportunity. It would give us a lift of about 20% in scale, whether it's number of customers, the size of our balance sheet. But ANZ's more than just Australia, and I think that comes through in our results today. Just look at our business. Look at where the strength came. The real underlying strength in our business in this particular period of time, and with what's going on in the world, whether it's trade and capital flows, et cetera, is our international capability and our institutional bank. And so we are more than a one-trick pony. Suncorp Bank, love to do it, be really important for Australian retail business. It's a nice thing to do. It's good. At a group level, it increases ANZ Group. It's about a 5% uplift in the group. So important, but not critical. Plan B, we just keep doing what we're doing.
All right, let's talk about those results for a second. I mean, decent results, as you've said, but below market estimates to a certain extent. I mean, your net margins estimates were 1.83%, and you've missed that. Goldman were really bullish going into this prospect. They were looking at a share price above 27 for the next the next couple of years ahead, and they were looking at dividends at much higher levels than this. You've gone for a sort of an extra unfranked dividend here as a mechanism to sort of be slightly conciliatory, is it? And you made some comments saying this is a little bonus for shareholders. Explain to me your thinking on this.
Well, I think this is a great result. This is a record result. Let's just remember where we've come from. Over the last 7 years, we've simplified the bank. We've sold over 30 businesses. And of course, when we've done that and given most of that capital back to shareholders, we give away the revenue at the same time. And what we've done now is we've replaced all that revenue and more and delivered really strong earnings as a result. So we're a simpler, better bank, and that came through. And the other point that came through in the result was the benefit of diversification. I mean, this is a time for having a diversified portfolio. There is a lot changing in the world, whether it's competition, technology, trade and capital flows, and we have more levers to pull than our peers. That came through. And what's really exciting about that is we've been able to do so in a highly productive way. Our cost management was better. Yes, margins are really tough. That's reflecting competition. It's a very, very competitive market, whether it's here in Australia, home lending, or in New Zealand or international. That's the name of the game. That is never going to change. But really, it's those that have the capability to flex and change and be agile in their resource allocation are going to win. And really what we saw here today is the beginning of that. And so we're really pleased with the result. It's just the beginning. And, you know, as I mentioned in my remarks, we've started the new year well, accepting that the world is a riskier place. And but we have more options ahead of available to us. And, you know, we've got a management team that's able to pull those levers.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.